Hello, traders. Hello, everyone, and welcome in the advanced room for the Friday's session of the week. We are here with Marius Hadjikyriakos, our senior analyst, to talk about markets, to talk about fundamental background and everything that's happening recently. Lots of things are happening. Markets are correlating with that and reacting to that sort of like not exactly how you would like to see them, so we have to ask also about that. We have to discuss also those correlations, what is most interesting, what is most confusing. Lots of noise, lots of European lots of central bankers speaking, and not easy to grab the some sense of it. So I'm here with Marius to talk about all of this, and Marius is smiling already. I'm sure he has many ideas to answer those questions and many more questions. We're gonna have a look also into next week. So looks like it's gonna be very interesting session. Hope you will join us in the chat. Hello, Marius. I'm not extending this introduction any longer. Welcome. How are you doing, sir? How it's been for you?
It's been great. Honestly, Martin, I left you alone for 1 week and I come back like war, markets are moving. So I don't know. Maybe I shouldn't go on vacations anymore. But all right.
I mean, whenever you are going to vacation on a vacation, please just come back and reserve one more hour. Like we have 2 hours session or something to talk about everything, because yeah, it's really like plenty of topics. So guys, we will definitely not gonna be able to discuss everything. So if you highlight most important, most interesting topics for you in the chat, then we can drive the conversation to take care of what's interesting for you. Hello, George. Hello, Kashif. Very nice to see you. Thank you for joining the chat. And Cottontail, of course, welcome. What should we start with actually? Is it like central bankers, some essence from central bankers, and data that's been released this week, because it creates some interesting picture, I believe. And yet still I'm not, I believe I'm not having full picture here. Probably you could add a lot to what I'm seeing, what I've seen, what I've read from that. Um, or
There's three huge topics we have to discuss. The first one
okay.
is, Middle East. We have to get that out of the way. The second one, and how it affects markets, of course. The second one being what's happening in the bond market. I mean, we discussed it a couple of weeks ago, and the craziness is still going on. And, as you very well know, the bond market is the elephant in the room that drives other markets. And beyond that, we have a very busy week next week, European Central Bank, US GDP data. So there's a lot of topics to discuss. Let's just get started somewhere. And I think and of course, the stock market, I had some nice reports about why I think it's still overvalued. In fact, I was doing a television appearance yesterday arguing that, you know, well,
Cottontail
yeah.
says market always tanks when you are away.
Well,
So please don't take more vacation this year, okay? They give
or
us like 2 months.
I should take more vacations so that you can buy cheaper. Okay.
Okay,
Um,
that's the mastermind. Um, so yeah, very nice to see all the comments. I hope the comments will be coming also in the YouTube and Facebook and other social media streams where we are also broadcasting. Guys, feel free to comment there if you have any questions or anything to suggest, any topic. We're gonna check that as well. So
let's do
probably
Israel.
the Middle Eastern
Yeah.
conflict is the most important and due topic to discuss right now. Um, but isn't it that bad, or haven't markets really priced that in fully?
Here's how I'm seeing it. It depends on the market, right? So let's do some general comments. whenever there's instability in the Middle East, usually the market cares for 5 minutes because it's not, it's not too shocking. Now, this time, we've seen market effects and we've seen those market effects persist for a couple of weeks now. The catch is that it's not a broad-based, risk of panic event in the markets. So what do I mean by that? The stock market hasn't really fallen, right? I mean, okay, the yesterday and earlier this week we saw some declines, but nothing too dramatic. We're back where we were trading, a couple of weeks ago, maybe less. So the stock market hasn't really reacted. The bond market hasn't reacted either. What you would expect to see when there's global panic and a geopolitical event happening would be yields on bonds going lower, right? Because we're buying the bonds, that pushes yields lower. That hasn't happened. Yields continue to go up. Yesterday we almost touched 5% in the US for the 10-year bond yield. That's really high. So we are not seeing the safe haven effect in bonds. We are not seeing it in the Japanese yen, and we are not seeing the risk of effect in stock markets. What we are seeing, though, is the risk of effect in gold. Gold prices have gone vertical for the last couple of weeks, and in the Swiss franc. So the market cares about it, but it really depends on which asset you ask, right? So gold really cares about it. The stock market couldn't care less. The bond market, like I don't think it has even mattered for the bond market. So it's really difficult to say where it goes from here. Personally, my own view is the following. Uh, Look, everybody, if you open up any news article, it basically says, oh, gold is going up because there's the risk of escalation in the Middle East. And there's always a risk of escalation. It's the Middle East. But I would say that, what's your risk now? So, no, Hamas hit Israel. Israel hit back with, bombing campaigns, and now that they're preparing a land invasion. So how do we escalate? Well, the real risk there is that Iran somehow gets involved. Because if Iran, by the way, we also forgot oil prices. Oil prices have also responded to this. So your risk is that somehow Iran gets into this conflict, either directly or indirectly. I don't think that's a real risk. I
So,
don't think it,
so
yeah.
yeah, so financial markets don't care about Palestine, apparently, right? That's
I mean, they
evident.
don't,
But
unfortunately. It's sad,
but
but they don't.
I mean, because it's a different type of game. It's a like financial numbers game, right? It's not connected with any human emotions, human feelings about this tragedy. But I'm thinking exactly what you said. Like you have two carrier battle groups positioned by US to Eastern Mediterranean. It's not against Palestine, clearly, right? So U.S. authorities definitely seen the risk of escalation in the Middle East because there's also Syria, there's also Turkey. Like Erdogan had quite hostile comments towards Israel. Iran, obviously, Iran from their rhetorics, they are just tiny bit from intervening in
Not
militarily,
not intervening.
but also Iran is sponsoring Hamas, right? And
Yeah.
Hezbollah, I believe
Hmm.
so. They
Yes.
they are sponsoring them, arming them. Like how far is Iran, especially after talks with Iran collapsed some time ago? How far is it from sanctions? I mean, I'm surprised there hasn't been any sanctions yet on Iran. So that affects oil market. That affects potentially gas market because also um, Israel becomes significant gas producer. Perhaps that was the reason why also Euro was hurt at the beginning of this conflict because there's been some disruption to gas production and Europe is buying from Israel. Emirates have been involved politically, quite vocal about this conflict. I mean, the risk of escalation seems not to be priced in, and that's just my, let's say, guesstimate. Okay, I don't want to make it a bold statement, but it
Let me
feels
ask
like
you this. Let me ask you this. Escalation in what form? In the form of Iran getting troops and declaring war on somebody? That's not happening.
Iran getting sanctioned, maybe.
Okay. That could happen. Here's the funny part though. Until 2 weeks ago, the Americans were relaxing their not their sanctions, but the enforcement of their sanctions on Iran. So because basically the Americans want lower oil prices, they were like, okay, we'll have all the sanctions in Iran, but maybe we are not going to be so tight about it. And you really saw Iranian oil production and Iranian oil exports rising throughout this year, but especially during the summer. So I don't think the Americans are ready to put sanctions on Iran. And if that was going to be the case, like a couple of days after the Hamas attacks, the US State Department and Israel came out and said there's no clear Iranian involvement. Now, you could say that might be politics, but usually when Iran does something, they are the first ones to say, no, it was
To
Iran,
call
it
it
was
out.
definitely. Yeah, they call them out. And this time they're like, we don't really have evidence for that. To my book, that says that even if Iran was involved, they did it in a concealed enough way that they avoid blowback on themselves. And I don't think they want to go into any regional conflicts with Israel. So my this is my personal opinion, of course, but I think that unless we see something dramatic happening over the next few days, and by dramatic I don't mean an Israeli invading force in Gaza and I'm not talking about the humanitarian crisis. I'm talking about something else happening that we haven't foreseen. Unless something dramatic happens over the next few days, I think the market is going to, like it has many times in the past, almost start to forget about what's happening. I think it's one of those things that get airtime for a couple, maybe 3 weeks, but then everyone goes back to normal. I mean, even Ukraine is in the background now, and nobody's really mentioning it. So, bad as it may be, from on a humanitarian level, the risks surrounding gold are tilted to the downside, and I think that the second the market stops freaking out about the Middle East, then the market starts to realize that, wait, hold on, bond yields are 5%, real yields are 2.5% plus inflation. Why wouldn't I buy a bond that gives me 5% instead of gold that gives me 0%? That's always the calculation for gold. You have to think
Well,
about it. Yeah.
yeah. Speaking about gold, there was a big news just recently that this very dramatic move on gold was created by a short squeeze. There was a
Could be.
large short position
Hmm.
covered
Yeah.
on gold um, when it started going up. It was like something unusually big on CME, right, on futures. So this was probably responsible for unproportional reaction. If you compare broader to other asset classes, um, the reaction on gold was really unproportionate. So yeah, if when short squeeze ends, because short squeeze is also like a snowball, right? You squeeze one bunch of shorts, one group of shorts, and so price shoots up. So other shorts starts being underwater, and they start being covered, and you get this avalanche effect. While it's over, yeah, it would be pretty normal for gold to calm down, and especially I've recently seen, and we are not talking about very short-term spikes and sharp moves, but in slightly longer term, gold was actually neutral for conflicts. This is one commentary I've been reading recently. I mean, first moment was buying, but then the market was coming back with many conflicts,
Yeah.
coming back to where it
Exactly like
started, and
Ukraine.
no net
Remember
gain.
Ukraine? Your discussing exactly the reaction after Ukraine. A price spike for a week, maybe slightly more, and then we start trading lower because it's not World War III after all, and I think that's what the market is going to realize very soon as far as the Gaza Israel situation goes.